Awesome. Well, thanks, BC. And again, Mary, thank you for allowing us the use of this facility today. It's nice to be able to have a facility that's big enough to where we can kind of social distance a little bit and learn a little bit more about QuickBooks. By the way, BC Clark with Nebraska Enterprise Fund. If you are not familiar with Nebraska Enterprise Fund, I highly, highly recommend that you and your business organization gets familiar with Nebraska Enterprise Fund. This is an amazing resource that's out there to help coach and help your business. If you're just having questions and you want to bounce ideas off of somebody, their mentoring and coaching is phenomenal. And so I highly, highly recommend that you look them up if you are in need of any business training resources, anything along the line. And the nice thing about it is there's a lot of organizations that do this. However, it's nice that they all kind of coordinate and work together. As we can see from this event here, was sponsored by many different organizations to kind of come together and help you learn QuickBooks. I'm going to do a brief introduction on myself, and then I want you to be ready because I'm going to ask you 3 questions. And since we only have 2 hours, we're going to go through this pretty quick. So I'm going to ask you 3 questions, and we're going to go around the room. First one is, what is your first name? Second one, what industry do you work in? And the third one, which will help me just a little bit, what is your experience level with QuickBooks? Could be, hey, I've used QuickBooks Desktop for 5 years and I think I know my way around, or I've never seen it before, right? And so we'll kind of discuss that, and that'll just kind of help me know where everybody's at, so that way we can hopefully teach to the class. My name is Jacob Malousek. I own an accounting firm in Ashland, Nebraska. So I-80 right between Lincoln and Omaha, Ashland, Nebraska. No offense, but I think it's one of the coolest small towns in Nebraska, right? So I love that community. Love that me and my family get to live there. Married my high school sweetheart, Shannon. Not that you guys really care about this, but I'm told to give some personal information, right? So I married my high school sweetheart, Shannon. Story kind of goes like this. When I was 15 years old, 15, I was working at the local Eagles Club in our small town, and in walked in the most beautiful woman I've ever seen in my life, right? And my buddy who was doing dishes bet me $1 that I would not get her number, and I'll do about anything for $1. So I went and got her number, and after that moment, she was instantaneously hooked on me for the last 25 years. My side of the story. She's not here to defend it. We have an 18-year-old daughter who this week goes off to college, right? So that's going to be kind of a tough one for us. We have a 16-year-old son, and we also have a 5-year-old daughter. So she's our trailer baby that pretty much just runs our house, right? So if any of you were or know of trailer babies, they pretty much just run the roost of what's going on. So why am I here? And so I own an accounting firm, and my firm and my team, we operate a little bit differently than what you would think of as an accountant. Last year, I completed exactly 1 income tax return. My entire team completed exactly 1 income tax return. That was my mom's because I didn't want her to have to go somewhere and do it. I didn't even do my own income tax return, right? So, because we're a little bit different in the accounting that we do. And so what we do is we help small to mid-market businesses design their accounting systems. And an accounting system really comprises of kind of 3 different parts, right? So we have the hardware, that's the computer. And the nice thing about most modern accounting systems, we could go to Walmart and buy a $400 computer and we got the hardware piece fixed, right? We have software, and that's what we're going to be talking about today. Most businesses today will use some sort of QuickBooks product that's in that small to mid-market kind of business area. They'll use some sort of QuickBooks product just simply because although it looks complex, overall it is kind of the simplest, most robust system that we can use. And the third part of an accounting system is people, right? And so that's where we spend our time focused on, is helping individuals just like yourself learn to use the tools that you have placed in your business to kind of maximize your operations, whether you're a nonprofit or a for-profit business, to help you maximize those and get to our number one goal, right? So we're going to come back to what our number one goal in business is here in a second, okay? So what I want to do, that's just a little bit about me. Let's go around the room. Again, 3 questions. First name, what industry you're in, and then kind of what's your experience level with QuickBooks. All right, so Jan, we're going to start with you. You're meeting BC, so we'll kind of get started here. Now, the first thing that we have to understand when we are talking about QuickBooks, that's kind of this broad generic term. There's a lot of different versions of QuickBooks that we can use and implement inside of our business. What we're going to focus on today is the desktop product. Okay, so that's what we're looking at here, and kind of from the sounds of it, that's probably what the vast majority of us are going to be using and familiar with. So we have the desktop product, and there is also kind of a whole nother category, if we would ever like, there is QuickBooks Online. And so essentially what we're doing is, instead of installing the software on a computer, I can access it in the cloud kind of from any device that's connected to the internet. So there's QuickBooks Online, QuickBooks Desktop. If you were to ask me 4 years ago, should I ever use QuickBooks Online? My answer would have been no. There is no reason you should use QuickBooks Online. However, that product has gotten a lot better, and right now we probably see a 50-50 mix, right? So 50% of enterprises are using QuickBooks Online, about 50% are using QuickBooks Desktop. When I teach this, however, I like to teach off of QuickBooks Desktop. And the reason for that is that it's kind of an all-encompassing program. And if I can teach you the fundamental steps of kind of what our accounting processes look like, those are easily we can translate those to any different accounting software that we would need to have. Now, the thing about QuickBooks, its maker, Intuit. Intuit is the company that makes QuickBooks, QuickBooks, QuickBooks Online. They even make some tax software. So if you've heard of that name before, you maybe did your own taxes with TurboTax or something like that. That's an Intuit product. So they are a financial software company that makes a lot of different products and services. One thing that you'll find, as good as they are about making software, they're just as good at marketing to you. So that's going to be my first kind of red flag here, is that whenever you're using an Intuit product, always kind of have this sense of skepticism in front of you. And the reason for that is they are always marketing to you. So for example, if you're going to use QuickBooks Desktop, there are roughly 3 different versions of QuickBooks Desktop that we can run, okay? So the first version of QuickBooks Desktop that we would run, it's called QuickBooks Pro. And that's probably what the vast majority of us in here are using, is QuickBooks Pro. The vast majority of you, that's what you would need to use, is QuickBooks Pro. So QuickBooks or Intuit is going to tell you each and every year, hey, you should upgrade your software, right? So you're going to start seeing pop-ups come up here. I don't have any right now because the new version isn't out, but you'll start having pop-ups come up here. Hey, upgrade your QuickBooks, upgrade your QuickBooks. Once you buy QuickBooks Desktop, you really only need to update it every 3 years. So I'm recommending that we only go out 3 years on our software before we would upgrade it. So where do I buy QuickBooks Pro at? Well, we could go to the office supply store and pick up a copy of it. We could go over to Walmart and get a copy of it. My recommendation, might hear some groans here. My recommendation is that we would buy QuickBooks Pro, if that's the software you're going to use. I'd recommend you purchase that on Amazon. Okay? And the reason for that is that everybody that has an agreement to sell QuickBooks. So if you sign an agreement to sell QuickBooks, you also have to sign an agreement that you will not sell it on Amazon. And the reason for that is because Intuit sells it on Amazon at the cheapest price possible, right? And so I always recommend that you would get it there. And the nice thing about it is that if you buy it on Amazon and you need to reinstall it on a different computer, you just log onto your Amazon account, you can download it again with your license keys. As opposed to if we went and had bought that box at Walmart with the software in it, and then we upgraded our laptop and we're like, where did that box go? You don't have to worry about that because just log back on the Amazon account. You are going to spend approximately $175 for this software. So when we talk about a piece of software that we can purchase that's in a tremendous value, I would say that there's not one that has a greater value than QuickBooks. Being able to purchase that for about $175 for 3 years. And that's the basic entry level that will work for 90% of the businesses out there. However, we might start adding some complexity inside of our business. For example, let's say that in our company, Rachel and I, we both want to work on QuickBooks at the exact same time. So what would happen there is we have this ability to do this thing called multi-user mode inside of QuickBooks. And so what that looks like is, Rachel, you would purchase a license and install it on your computer. And I would purchase a license and install it on my computer. And so long as we were on the same network inside the same building, think of it that way, we could both work on QuickBooks at the exact same time. So Rachel, maybe your job duties are going to be, hey, I'm going to create invoices for our customers, and I'm going to get the invoices out. And maybe my job responsibilities are, hey, I paid the bills, and so I'm going to enter my accounts payable. We can do that simultaneously. Now with QuickBooks Pro, the issue that we run up against is that they cap us at allowing to have 3 different people work on it at one time. So let's say we introduce Adam into our kind of deal here, and Adam likes to look at the reports and make sure that, Rachel, that you and I are doing our jobs correctly, right? And so we can all be logged on at the same time. We would each just have to purchase one of those licenses for $175. But if we needed to add one more person, we couldn't do it in that environment. Okay, so we can only have up to 3 simultaneous users when we're using QuickBooks Pro. Now, QuickBooks makes, so here's how I want you to think of these different versions. QuickBooks Pro is like a Chevy, okay? It's going to get me there, it's comfortable, right? Air conditioning's got all the features that I'm going to need to drive. But occasionally, sometimes in our business, it's like, that Buick is kind of nice. You know, it's got the heated seats and so on and so forth. And so the Buick is kind of like the QuickBooks Premier. Now, I said that Intuit is an amazing marketing company, right? And when QuickBooks came out with this Premier line of software, what they did is they put these special labels on it. So QuickBooks Premier for contractors. QuickBooks Premier for professionals, QuickBooks Premier for nonprofits. Now here's the thing, or QuickBooks Premier for retail. They have all of these different versions. And we might be looking at our options of which QuickBooks we want to buy, and we're like, well, man, I'm a contractor, I should probably buy this one. Well, of course that's what they want you to buy, because that one's going to be about $350 as opposed to the $175, okay? And there's fundamentally, in most cases, not a specific reason to upgrade to that premier level of QuickBooks just to get that industry version. However, CJ, I'm going to pick you out as an example here, right? So you're using QuickBooks Premier Nonprofit, okay? And so since you are a nonprofit, I will typically tell nonprofits that is okay. Get that version, but you're going to go to TechSoup to purchase that version. Are you familiar with that? Okay, so then you're going to pay like 30 bucks for it. So you'll be just fine as a nonprofit doing that. Okay, so that's the Buick QuickBooks Premier. With that one, I can go up to 5 simultaneous users. Once we get that high, plan on spending $300 per license. So if we had 5 users, it's about $300 per license. My first one's about $350. So where would I buy a Premier? If I wanted to go to Premier, where would I buy that from? Well, what I would do is I would talk to your local CPA firm to see if they are a QuickBooks reseller. And if they are a QuickBooks reseller, your best option is to purchase it from them. Or you can just do a Google search for a QuickBooks reseller. So this one's a little bit different. A lot of times Intuit would love it if you go to their website and just purchase it there. But that's going to be the highest price that you pay for that product, right? In addition, if you go to Amazon, that's probably the highest price that you would pay for that product. If you find a reseller, they can give you a little bit better price. And like as an example, this is not a sales push, but if somebody comes to our firm and buys QuickBooks, like I have some margin there, right? So when I sell it to you, I'm not selling it to you at my cost. I mean, I'm not benevolent, that benevolent after all. So what we do is we typically would install it for you. So a lot of times your resellers, when we start getting into those more complex, I've got 5 different things, a lot of times those resellers will actually come in and help you install it and get it set up. So just do a Google search for a QuickBooks reseller and just kind of talk to them if you need to buy that version. There is another version of QuickBooks out there. It's called QuickBooks Enterprise. Is anybody using QuickBooks Enterprise out there? I didn't think so. So this is like our Cadillac version of the software, right? And so what this has is a whole bunch of bells and features that we can add on and we can make this stuff incredibly expensive. Very few businesses, in my opinion, ever need to get to that Cadillac level of QuickBooks. However, I do want you to beware. You can obviously tell by this time in this little series here that like I love Intuit products, but I'm going to give you, I'm not working for Intuit here, right? So here's where you got to be whenever you reach out to Intuit to get help. Let's say your QuickBooks is running slow, or something's just not working quite right in your QuickBooks. Do you know what their #1 recommendation to you is?
Upgrade.
Upgrade to Enterprise. It will fix your problem. Right? And here's the deal if we upgrade to Enterprise. That works a little bit differently. That's a subscription. We pay a fee for that each and every year, and that subscription is going to start to be about $2,000 a year. Just kind of have that in the back of your mind. If I'm in Enterprise, I'm spending about $2,000 a year. But Jacob, that's not what they told me on the phone. They told me it was going to be $1,000 for the software. I only paid $1,000 to get the software. Have any of you ever had cable TV or Dish Network? Right? Starts off at $39 a month, but where does it end up when you open up a bill 2 years later, right? We're at $150 or whatever, right? Same thing happens with their subscription service here. They just kind of, I'm just going to automatically renew you at this rate, this rate, this rate. So if there's ever a situation that we can remove somebody out of working in Enterprise, we certainly do, just because the added features that you get with Enterprise really are not worth the additional funds. There are very specific situations where we do put people in Enterprise, but overall, that's not the case. So that's our QuickBooks desktop suite, right? So you're going to pick Pro, Premier, Enterprise. QuickBooks Online, they kind of have 4 tiers of that as well, but what you just have to understand, since we're not really talking about QuickBooks Online today, those are going to be monthly subscriptions. So they have a $40 plan, they have a $70 plan, and they have a $150 plan per month is what you'll pay for that, is what you would pay for that software. So you can see that that's going to be a lot more expensive of an option unless we really, really need that option. And sometimes if we have people who are out in the field, like contractors a lot of times, they'll say, hey, you know what, this is worth it to me to be able to have an option like this of being able to use the QuickBooks Online. Okay. So here's my goal here. I don't want to shoot above or below anybody with this next topic here. But what I want to do is just give you a little bit of an introduction to some vocabulary. Okay? Because the thing about what makes this intimidating, especially for new users, is we have all of this different vocabulary that's thrown around. We're like, I don't know what that means. What does this mean? And like, what am I supposed to do with it? So if you don't mind, I'm just going to take a few minutes here. We're going to go over some vocabulary. So the first thing that you will hear once we start using a software like this is our chart of accounts. Okay? So have we heard that term before, our chart of accounts? And so what our chart of accounts is I want you to think of it as kind of that spinal cord of your accounting system. It's what supports your accounting system. Okay? And so what our chart of accounts does is our different accounts that we tie transactions to. Let me see if I can help you visualize what a chart of accounts is. Neil, you cannot laugh at me since you're a CPA here, okay? I want you to pretend we go down to, or we go over here to Ace Hardware. Is there an Ace Hardware here? Just pretend there's an Ace Hardware there, and we go buy a bunch of 5-gallon buckets. You're all from rural Nebraska. I do not have to explain to you what a 5-gallon bucket is, right? Try teaching this class in Houston. I have no idea. Unless they worked in a restaurant, and that's what the pickles came. Okay, so I have all these 5-gallon buckets. And so I'm going to line up all those 5-gallon buckets across the front of the room. And each one of those buckets is going to be an account inside of my chart of accounts. And here's the deal. Because we're accountants and we like to have everything organized, we're going to color code these. Right? Because we have different types of buckets in our chart of accounts. Okay, so buckets is our chart of accounts. So the first type of bucket that I have in my business, in my chart of accounts, are my assets. We all probably kind of know what an asset is, right? So I got my assets. These are cash in the bank. We have machinery, right? So we might have a baler, or we might have a tractor, or we might have some retail fixtures or a computer system or something like that. We have these fixed assets inside of our company. Cash, accounts receivable, fixed assets, trucks, different things like that that we own, land, buildings, so on and so forth. We have these assets, typically things that we own. If you really want to get down in the weeds, we start talking, I'm just giving you vocabulary, things that you're going to hear is current assets and fixed assets. All that really means is a current asset is we expect you to use that up in the next year. Right? So cash at the bank, would that be a current asset? Yeah. Some of you are like, I'll use that up next week. Watch me. Right? So that's a current asset. Accounts receivable. That better be a current asset, right? So we should be turning that over. Inventory, right? So if we had an auto dealership, right? Ron, can I pick on you here for a minute?
Absolutely.
If you had a car sitting on a lot for more than a year, is that good or a bad thing? What's that? That's not a good thing, right? So those better be current assets. We better be turning those things over and over. We have some fixed assets. Those are those things that are going to hold around for longer than a year. That truck that we have, right? So the Bobcat or the skid steer, whatever we call it, right? Whatever I have in my construction business, those things are going to be around longer than a year. My assets. First group of buckets, right over here. Second group of buckets, liabilities. We owe people, right? And so we're going to have a bucket for those different types of liabilities that we have. So I probably have accounts payable. So my vendor just gave me a bill, and I'm going to pay that bill next week. Well, while I'm holding on to that bill, I have accounts payable. We might use a credit card in our business. So when I swipe that credit card, until I pay that credit card off, I owe that credit card company money. So I have that liability there. If we have employees, we have things called payroll liabilities, right? So, you know, if we think about that, Adam, can I pick on you here for just a quick second? Yeah. Let's pretend we're going back to the very first job that you had. Let's pretend it was a W-2 job, right? Not walking beans or doing something like that for cash. But, you know, your boss said, hey, I'm going to pay you $500 a week or whatever that looks like. And you get to the end of the first week and you're like, this is going to be nice. I'm going to have $500 in my hand, right? And then it gets real quick when you look at that check. And you're like, who's FICA? I want to meet that, right? So as an employer, when we pay our employees, don't we withhold stuff out of their check? That's not my money. That's Adam's money. And so I have to forward that all out to the taxing agencies. And while I'm holding on to your money, Adam, it's a liability to our company. Okay? Long-term liabilities, so we might have a mortgage, we might have taken a loan out on that skid steer, something like that. We'll have those loans. Those are our long-term liabilities. All right, quick review. First type of accounts I have are assets, then I have liabilities. By the way, we can split those up into current, long-term liabilities. Things that I'm going to pay off in under a year, things that are going to be around here longer than a year. Then I get to some weird accounts, right? Call my equity accounts. For whatever reason, bankers like these accounts, right? So I have my equity accounts, and so in my equity accounts is, let's back up here. Where have we heard that term equity before? In our house? Right? Hey, how much equity do you have in your house? Isn't that essentially like, hey, what's this house worth? What's the asset worth? Less, how much do you owe the bank on it? Is how much of that house you own, right? Same thing works in business. When I add up all of my assets in this business, and I subtract off everything that I owe everybody else, what I own of the business is my equity, okay? And here's the thing. When you are looking at your QuickBooks, I'm assuming everybody walks alongside of a CPA or has somebody filing their taxes for them. Here's the deal. They're going to make some weird entries into these equity accounts. You're like, what does all of this mean? And all I really want you to focus on when you're looking at your equity accounts is add up all those equity accounts, plus minuses in there, add all those up to your total equity. That's your stake in your business. Okay? Never sell your business for that number, but you just know that that's your stake in the business. Right? So when we go to a lender, let's say we're going to expand and we're going to do all that stuff, they're looking at that, right? Because, okay, what is that doing? You know, like what, do they own any of that stuff, or is it just all mortgaged to the hilt? So that's what our equity is. Assets, liabilities, equity. And what I just did here is I described the 3 types of accounts that fall on a very special report that we're going to talk about. Does anybody know, you know, you can't answer this, does anybody know what report those accounts fall onto? This is a tough question.
Financial statements.
So it's on our financial statements. It's a balance sheet, correct. And so we would refer to this collective group of our accounts as our balance sheet accounts. Reason that that's such a tough question is that the average small business doesn't spend a lot of time focusing on our balance sheet. So we probably don't talk about those a whole lot. Now we start getting into the accounts that we talk about quite a bit. And so the first type of account that we're going to next talk about is our income accounts. And so our income accounts is where we record revenue that we get for selling products or providing services, right? And so, you know, Adam, I'm gonna pick on you here. Residential construction, remodeling?
Both. Residential, commercial.
Okay, let's just pretend that we're gonna keep it real simple here real quick, right? So Adam does, I'm making this up, he does residential new home builds and residential remodel. Making it up, okay? So in his QuickBooks file, if I was to look in his QuickBooks file, I probably have 2 different income categories. I want to know what my income is on new home construction. I want to know what my income is on remodel, right? Because those are 2 different animals, are they not? Right? So there's two different businesses essentially. And so you would have those, and maybe you would add, you know, on your commercial side, a couple more there. But we're going to keep those income accounts pretty tight. And we're going to create an income account for if you sold a door, or if you sold, you know, plumbing, or that's part of one of those 2 broad categories. So I have my income categories right here. Most businesses, 2, 3, 4 buckets you're going to have in your income. Coming down here and looking at my other buckets that I have going all the way to the wall here, I have a special type of bucket that we'll talk about next. And this bucket only exists if you sell products. Okay? So if you sell products, not just services, but if you sell products, you're going to have a thing called cost of goods sold. And so you're going to have cost of goods sold, which is a special expense account that comes before all other expenses. This is how I define it. Your cost of goods sold are your expenses that come before all other expenses. So what is cost of goods sold? Let's say that I sell this widget right here. Okay? I sell this widget for $1,000. That's my income. How much did it cost me to buy this widget? Right? That's my cost of goods sold. So let's say it cost me $750 to buy this widget. That's how much my cost of goods sold is. And we can very quickly get to another vocabulary term. Because our sales minus our cost of goods sold is our gross profit. Okay? I didn't say that with enough reverence. Our sales minus our cost of goods sold is our gross profit. So here's the deal. If you sell any products whatsoever in your business, I do not care about your sales whatsoever. Means zero to me what your sales are. I care about your gross profit. Because, Tara, do you mind if I pick on you here? Okay, so,
A lot of meat here.
Neil, can I pick on you
Yes,
for this
go ahead.
example here? So, my business is expanding. I'm going to hire a couple of sales individuals to help me out. We're selling widgets here, okay? So, I tell Howard and Neil that, hey, guess what? I'm going to give whoever is the best salesperson at the end of this month, I'm going to give them a $10,000 bonus. Are we going to go out and sell? Are we excited?
Sounds like our business.
Right? So Ron, you live this life. You know where I'm going with this.
What is this, past the buck or
Yeah.
what?
We call them spiffs in the old days.
Right? Neil, you go out and in your first month you sell $1 million worth of widgets. Okay? Good job. Nobody's ever sold $1 million, right? Howard, you come in at $750,000. Who gets the bonus? We give it to Neil or we give it to Howard?
Well, your definition said he who outsells the most, so Neil would.
I was really careful how I worded that, the best salesperson. I left it very, very vague.
Then,
Here's the deal. Neil went out and sold $1 million worth of widgets, but he was cutting deals everywhere. Right? Picking on you here, Neil. Probably shouldn't pick on the attorney.
it's true.
Sold $1 million, they cost us $900,000. We had $100,000 worth of gross profit, right? Howard, you sold $750,000. They cost us $500,000. We had $250,000 worth of gross profit. Who's my rock star now?
I was a giveaway artist.
Right? And so that's why sales never impress me. My gross profit impresses me.
He was building future sales.
You know,
relationships.
I only seen that work once, and Amazon pulled it off, but I don't know.
That's the excuse.
Yeah, that we hear often, right? So that's my gross profit. And I use those gross profit dollars to pay all my overhead expenses. Okay? So those are our remaining buckets, our overhead expenses. Advertising, dues and subscriptions, meals, utilities, interest,
Retirement.
yeah, employee benefits, wages, all of those things are part of my overhead expense, rent. So that list seems to go on and on and on. Now, one thing that I want you just to kind of keep in mind here, when you are setting up your QuickBooks or if you've inherited somebody else's QuickBooks, is I am a huge fan of having a relatively brief chart of accounts, right? So occasionally what happens is we get a little chart of account happy, right? So I have literally seen this before, right? So I had an expense account called cell phone, right? Okay, that's fine. And they had a sub account below it of roaming, data usage, you know, like device, all these, like they broke it down into 6 or 7 different parts. And here's the deal. The reason I point this out, this exaggerated version of this, is that we have to think of what our end goal is in mind. Do we want QuickBooks to be able to tell us how much we spent on roaming? I mean, roaming's not even a thing anymore, right? Is it? But do we want QuickBooks to be able to tell us that? Is that our end goal of QuickBooks? I would say it's not. Because if you really want to know how much data overage you had, wouldn't you just go look at the bill? Right? We sometimes overthink this. And so I want your chart of accounts to be relatively brief, so that way when you analyze your financials, where you're having issues is going to pop out at you like a sore thumb. And then you'll see on a high level we have a problem. Then I can go dig in and pull the cell phone bill to look at. Does that make sense? If I start giving you a financial report that's 4 pages long, where do you even begin to look? So I am a fan of a relatively brief chart of accounts. By the way, your lending institutions are as well, right? Because they have to go take your financials and spread that, right? And so Do you ever be involved in that part of it? Do you do lending?
Yes.
So when they hand you a financial and it's 12 pages long, is that hard to spread that, or do you just, you lump it all together anyways, don't you, basically?
Yeah.
So, yeah, if they had to spread every one of those line items, that would not be a fun day for them. So, it's helpful to have a brief chart of accounts. The other thing that we have, and so by the way, I'm going to show you just kind of a quick overview what we're looking at on our screen here. And so when we're looking at our screen, I typically will work off of the home page inside of QuickBooks here. So when you set up your QuickBooks file, and it sets up, this is what it's going to look like. This is your home page. You may or may not have every one of those icons. As you add features to it, those icons will appear. So typically, what I will do is I will always work off of the home page. There's 3 or 4 different ways that you can do almost any function inside of QuickBooks. And so, Rachel, this is going to be important for you. So if somebody comes to you and says, well, that's not how I do it, like if they go and they start creating an invoice a different way, don't worry about that. There's 3 or 4 different ways to do it. You just find what works best for you. And again, I like to work off of the home page here. By the way, if you're ever away from the home page inside of QuickBooks, on the left here it says home. You click on that, it'll take you back here. Up here on my home page, I have my chart of accounts. So if you ever want to see what you have set up in your chart of accounts, you can just simply click this here. And here are all of your accounts in your chart of accounts. If you ever need to add an account inside of your chart of accounts, you'll find that most of these screens inside of QuickBooks are set up the same way. I come down here to my lower left where this says account, and then up to new. Remember how I color-coded my buckets with the different types? Here I have to tell it, okay, well, which one of those categories does this fit into? Is this an income? Is this an expense, equity, fixed assets, so on and so forth? There's other account types here where you can do your cost of goods sold, so on and so forth. Well, let's just say I'm going to make an expense account here. I'm going to call it bank fees.
Doggone bank fees, I'll cut it.
And then I'm going to hit save and close. See how I added a new bucket right here? Here's what happens a lot of times. I'm just trying to point out mistakes, common mistakes that we see. You see how I added a bank fee here? I already had a bank service charge. So a lot of times we got 2 accounts that mean the exact same thing. Okay? So I want to show you how you can clean up your chart of accounts a little bit if you've inherited a mess. Like we've just got way too much stuff going on here. I got 4 things that all mean the exact same thing. What I can do is I can merge these 2 accounts. So this is a trick that we can do inside of QuickBooks if you ever need a chart of account cleanup. You can merge those 2 accounts. So if there was 5,000 transactions in each one of those accounts from the beginning of time, what I can do is I can combine those 2 accounts into one, and there'll be 10,000 transactions in that account. Just that quick. Probably one of the more difficult concepts to implement, to do. But essentially, all I need to do is change the name to be exactly the same as the other account that I want it to merge into. So you see how I have this bank service charges? All I need to do is go in there and change that name to bank fees, and then those 2 accounts will merge. So let me just show you how to do that. So if I'm in my chart of accounts and I right click on it to edit that account, and I change that account to be exactly the same as that other account, you can hit save and close, and what it will do is it will give you this error up here that says, hey, this account is already being used. Do you want to merge that? And then I would just hit yes, and that would merge those accounts. So this is primarily for those of you that have a mess to kind of clean up here in your chart of accounts. Okay? You can use kind of that merge function. You can do the create to create the accounts that you want to make the chart of accounts work for you. Yes? Ron?
Talking about chart of accounts, does QuickBooks come with a suggested chart of accounts, a basic fundamental chart of accounts for businesses? Are there choices that you can make?
Yeah, great question, great question. And so when you set up QuickBooks for the very first time you install it, and this is the process that you're going through right now, it'll ask you a series of questions. Primarily the most important question that it's asking you is, hey, what industry are you in? And when you select that industry, it's going to predefine, to your point, Ryan, it's going to predefine your chart of accounts for you. And so that will get you 90% of the way there. So you don't have to, this doesn't have to be so overwhelming. You don't have to invent the wheel.
Like a Schedule E, a Schedule C, or a Schedule F is a pretty nice way to do it. That's what your account's gonna be looking for.
Yeah. And so especially with the Schedule F, because that one, they have different terminology on that one, right? And so a lot of times what we'll do is, especially if you file Schedule F for farmers, is what we'll do is we'll just kind of work with the CPA to set up your chart of accounts. So those will be kind of specific on what they want. And then that, if it's done correctly, that makes the job of filling out that Schedule F really, really fast and really, really easy to do. So that's my chart of accounts here. Any questions with this? Okay.
When you set up a Schedule F, do you have a chart up here that shows you Schedule F, or?
So that typically I'll just get from my CPA. And then I will create all of those different accounts.
So the system can obviously run an EEC, an F, all function, and goes well.
Yeah, so essentially your CPA is just going to take your information here and translate it into whatever tax form. Now, QuickBooks does have, I probably shouldn't even mention this, it does have something called tax line mapping in it, but I gotta tell you, nobody's using it. So essentially what it would do is that if your CPA was really, really tech savvy, and both of you I would classify as really, really A-type, like everything is gonna be perfect, what it can do is your CPA can set up the software to talk to their software and automatically populate your tax return. I don't do that for a couple of reasons. One is most CPAs don't want to do that, and if I had a CPA that just wanted to push a button and have the tax return filled out, I'm probably not paying them for the right service. Does that make sense? So like, hey, maybe we should dig into this a little bit and just make sure everything's good, right? So we've got that. Two other things, pieces of vocabulary I want to give you, is inside of QuickBooks we have these things called lists. So we have all different types of lists in QuickBooks. So I have a customer list, names of all my customers. I have a vendor list, name of all my vendors. I have a product and items list. So all the different products that I sell, all the different services that I provide are going to be contained in a list, right? So they'll be there. We can create those, so on and so forth. The other piece of vocabulary that I want to give you is this term called centers. So QuickBooks works off of centers. And what I mean by a center is that we will have a customer center. We will have a vendor center. And we will have an employee center. And so what I want you to imagine when you hear the term center is filing cabinet. Okay? Because if we were doing everything on hand, if I was to go to your office, would you not have a filing cabinet on there that at the top of it probably says customers? And if I open that up, I could probably find Anthony's file, pretend he's a customer, and if I opened up his file, wouldn't there be a copy of every invoice, everything we've ever done with Anthony, record of all of his payments, any estimates that we created for Anthony? Would that not be in that file? Well, the same thing happens inside of QuickBooks. I have what we call a customer center. And so when I go into that customer center, I can go and I can search for a name, pull up a name, and then everything to do with that customer will be displayed there for me, okay? And so a lot of times when we're dealing with customers, we'll work out of those centers, or vendors. So a vendor by definition, somebody that's providing a product or service to you that you are going to pay, right? So when I want to go look up ABC, I don't even know if you use ABC Supply, but let's say we buy our siding from ABC Supply. When I go look up ABC Supply, I want to know what I paid for siding 3 years ago from them, right? This certain type of siding. You can go through and just very quickly sort through that, pull up the invoice, and you can see. Okay, so those are our centers. So we have lists, which is just the names of all our customers, vendors, products, and services that we sell. And then we have centers. That's kind of like our filing cabinet, where we keep all of that data on our customers. Think of it like that customer center. Think of that as your mini CRM. So some of you that, picking on Ron here again, right? So in your auto dealership, you probably had an incredibly robust CRM, right? So you knew everything there was to know about your customers, and you tracked it, and you kept track of it. Well, you have that same ability to do that inside of QuickBooks, inside that customer center. That can act as your CRM for you. So that just some vocabulary. We'll get into those. We'll look at those. But the next thing that I want to share with you is this concept that we have called accounting cycles. So inside of QuickBooks, when we're actually doing our work inside of QuickBooks, how that works is we're going to break that down into different cycles, okay? Because if we just look at QuickBooks and say, hey, I need you to do my books, that's a little overwhelming, right? So we have these different cycles inside of QuickBooks, our different accounting cycles. What are they? Well, roughly what they are is our accounts payable. So what accounts payable inside of QuickBooks does is it keeps track of all of the expenses that we've incurred and who we owe money to at this moment. And it helps us facilitating cutting those checks to those individuals, or those companies or individuals. So that's our accounts payable cycle, okay? We also have our accounts receivable or /sales cycle. So what that does is when I'm working in that cycle of QuickBooks or in that area of QuickBooks, that's where I'm recording the revenue that I have coming in to our business or organization. So accounts payable, who I owe money to, accounts receivable, who owes me money, or what products or services that we provided. I know this sounds very, very basic. We also have a payroll cycle inside of QuickBooks. And so if you are going to use QuickBooks to pay your employees, there's a whole payroll cycle that we can follow inside of QuickBooks. However, the most important cycle that we have inside of QuickBooks is our banking cycle. Okay? And so our banking cycle, that's where we make sure that we have recorded all of the transactions that have happened on our credit cards and through our bank account. So when I get somebody who, Rachel, I'm going to pick on you here for a minute, right? So I'm sure you sit down at your desk and you look at this. It's got to be a little bit intimidating. First time, like, or overwhelming maybe, potentially. Maybe it wasn't, but if it was me the very first time I saw this, I was like, man, this is kind of intimidating. Where do I start? Right? So that's the question we get. Where should I start? What should I focus on? Focus on your bank account. Okay? And here's the reason why. Because if we think about it, at one point or another, do not most transactions flow through our bank account? And sometime in its life cycle, it's going to probably flow through the bank account. So if you do business with a customer, that money is ultimately going to end up in that bank account. If you buy materials from a supplier, chances are there's going to be a check that shows up through the bank account. Does that make sense? So kind of the end destination for all of our processes ends up at the bank account, typically in one way or the other. So here's the trap that we see so many small business owners in, is that most small business owners that I have seen that are just launching or getting started, they can get onto their online bank account in like 2 seconds, right? Because they've done it 14 times today. Make sense? So most small businesses are always looking at their online bank account to see how much cash we have. You know you're doing QuickBooks correct and you're at a high level if you no longer look at your online bank account and you're looking in QuickBooks to have the most accurate reflection of how much money you have. Make sense? Because QuickBooks should theoretically know about stuff that the bank doesn't know about. Right? I've got that tax payment coming out next week. I've already got it recorded in QuickBooks, but the bank doesn't know about that. So if you want your true balance, I want you to be able to find your true balance of how much money you have in the bank inside of QuickBooks. Once you get there, you're pretty much where you need to be in terms of your whole accounting processes. That's why I say we start with the bank account.
Yeah, but if you have money in the bank, you can spend it, right?
Right?
He's semi-retired, what do you expect?
Ron, how long were you in business?
Yeah, a long time.
Long time?
40
So you went through the roller coaster ride of being an entrepreneur. I'm assuming, right? So I'm going to pick on somebody who was in business for 40 years. Cash at the bank really isn't that important when there's a lot of it there. When there's not, there's nothing more important, right? So if as an entrepreneur, you will experience that, right? More than likely at some point in your whole journey. We would say cash flow is the least important thing until there is none, then it's the most important thing, right? But I want you to know your cash position by looking in QuickBooks. If we get there, we're in really, really good shape. So, how do we do that? Well, we can get transactions into QuickBooks, into our check register, pretty much one of three ways. One is that I can just go directly into my check register and enter every transaction line by line in that register. So those of you who are old enough to remember this, when we used to go to the bank and order checks, they would send them to us in a box. And when you opened up that box, there was a little register that you would keep track of your checking account, right? It's a lost art. Most people are like, what are you talking about, Jacob? No, it's how we used to do it. We used to do it on a register. Some of us still do that. But inside of QuickBooks, we have a register as well. It's just a digital register of what's happened at the bank. And so what you can do from your desktop or from your homepage here is you just click check register. If you have multiple checking accounts, you select which checking account you're going to go into, and you just hit OK. I'm going to say this for dramatic effect, but again, when you open up this register, after you've entered the transactions for today, that should be your most accurate, true bank balance that you have, right? So I can, again, get these transactions into this register kind of one of three broad ways. One is I can come in here and I can directly enter this transaction into this register. So let me show you how that's done. Essentially, you type in the date. Whatever date that transaction happened. By the way, some shortcuts for you. If you ever are in QuickBooks working with dates, your default settings on dates is always going to be the last date that you used. So if you were entering stuff from last month, and you go to enter a transaction for today, by default, it's going to be dated last month. So there's some ways around that. And so if you're ever in QuickBooks on a date field, and you hit the letter T, that'll put today's date into that date field. Some lesser used, but fun shortcuts. If you type the letter W, that's the first day of the week that it'll put in there. K, last day of the week. M would be the first day of the month, H would be the last day of the month, Y would be the first day of the year, R would be the last day of the year. So if you spell out week, first and last letter, year, first and last letter. And so we don't use those too often, but you know, a lot of times if you're doing month-end stuff, that H is handy to type in there, so that way it always goes to the last day of the month. Then I'm going to put my number in here. So this number could be a lot of different things. If I was recording a check that we just hand wrote out and gave it to somebody and I needed to get it in my register, whatever that check number is, you type it here. Say somebody went out and used a debit card, swiped a debit card someplace, and I needed to record that transaction in here. Okay? Some people will leave that blank. Sometimes I'll type in debit or I'll type in EFT in there. So that way I just know that that was an electronic transaction. Okay? If I want to use QuickBooks to print out my checks, how many of us are doing that, by the way? Some of us are using QuickBooks to print out our checks. Highly recommend it. Save you so much time. You can buy check stock from Intuit, and you can just print those checks out. You can also buy it from your bank. They're not benevolent in that transaction, so it's usually a little bit more expensive. Sorry. It's the easiest way to order checks, but if you're like hunting for a deal, you can just go to Intuit and buy them there. Okay? So if you want to print those out, you can type the letter T, and it will say to print. Or sometimes a lot of our world just happens auto pay, right? So we just got, you know, our utility bill automatically comes out of the checking account. You put EFT, whatever you want to, right in there. You're going to type in the name of where this went to. So let's say I went to Walmart. I'm going to back this up and go slow. So when I type in W, you see what it's doing here? It went through the lists that I talked about, my customers and my vendors. And it tried to predict the most likely person that I was going to spend money with, right? And so like this one said, Wington Public Relations. So if that was the one, all I would have to do is hit the tab key and I wouldn't have to type it out, right? And as you type in more of the name, it's going to predict. Now, as I typed in Walmart into this category, do you see how that none of these are green? What that means is Walmart does not exist in our QuickBooks. Surprisingly enough, we've never spent $1 at Walmart. So what I can do here is I'll just type in Walmart, and then I'll hit the tab key. It's going to say, hey, Walmart is not in here. What do you want to do? And right from here, we can add Walmart in there. I can do a quick add right here, add them in. Specify who Walmart is, vendor, customer, employer, and other. Let's talk about that for just a quick second. Let's do some definitions here. Vendor, somebody that provides you goods or services that you will owe money to. Customer, somebody you provide goods or services to that owes you money. Right? Well, since Walmart, I'm never going to owe them money, right? Because I'm always going to pay them at the point of purchase. I don't necessarily need to track them as a vendor if you don't want to. I can just put them as an other. No right or wrong there. That's just how I do it, is I'll typically track them as an other. The amount, so how much I spend with Walmart. You just type that in there. By the way, anytime you're on a numeric field inside of QuickBooks, so like I was typing in the amount there, you can use that as a 10-key calculator. And so like I typed in 56, and then I hit my plus key, minus, multiply, divide, whatever you want to do. So let's say I had two things, 56 and then $12, and I was running a little slow that day, so I just wanted this to do the math for me. If I hit tab, it will automatically add that up for you. So that's a great trick. Here is the most important part. This is where I'm going to categorize this particular line item. What expense account does that go to? Let's say it's office supplies as an example. I can type in office. I don't have it in there. Just type in supplies. So you notice how I started typing in the first couple of letters there and supplies came up? I don't need to type in the rest. I can just hit the tab key. And then I can type in a memo. I'm a huge fan of typing in memos, by the way. Okay? Because somebody's going to ask you. So Rachel, I'm kind of picking on you because you're just kind of brand new here, right? I'm just telling you how the average business works. About 2 years from now, somebody's going to ask you what you bought at Walmart. You're like, I don't know. So I'm a huge fan of putting memos in there. Be like, oh, that's when we bought the office paper. Make sense? So I'm a huge fan of that. Where'd it go? Transaction disappeared. It's not in there. So what will happen is I want to show you something here. When I scroll up in my register, your track ball is really nice for this. You'll see in your register a blue line. And what that blue line in your register represents is that's today's date. Because all these payroll checks and all this stuff I cut, those aren't going out till Friday. So here's how much money you have when everything clears. Here's how much money you have today. Make sense? And so we can kind of see what that looks like. And so this transaction was right in here. Some other things that I want to point out to you is that there is this column right here with a little check mark at the top of it. As we begin to reconcile our account out each and every month, once we've reconciled the transaction, there will be a check mark that comes in right here along that transaction. What that check mark signifies to you is that, yes, we created this transaction, and yes, it cleared the bank. So it kind of tells us we're done with this transaction. We're not waiting on anything with this transaction. However, QuickBooks would allow me to kind of override those check marks inside the register. So the point I'm trying to make here is let QuickBooks fill out those check marks for you as we do our reconciliations. And it should feel extremely wrong to ever go into our register and mess with those check marks whatsoever. You get this big warning sign that comes up. And if you're anything like me, you don't read warning signs. You're like, oh, that's what I want to do, and I hit yes. Let me paraphrase that for you since you can't read it. Within the next 30 days, you're going to have a horrible day. Basically what that's saying. Because when you try to reconcile that account out the next time, it's not going to work. Because what we did by messing with check marks in there is we said that, hey, I know we looked at a bank statement and this transaction actually happened, but now I'm saying it didn't. And so your beginning balances are going to be off, and it's just going to be a nightmare for you. So let's avoid ever messing with those check marks inside your register, okay? Other cool features inside this register. Is that I have a search function right up here. I can do this go to. I can either search by payee, I can search by amount, by memo. If you're looking for something specific, I can search for it there. So I'm going to search for a payee, and I have a vendor called Gas and Electric Company. So what will happen is I'm going to select that I want to search for, and once I hit the back button, it's going to take me to the previous transaction to that particular vendor. So if you're ever trying to do some research on this, you can go and see real quickly, okay, what were the last checks that I wrote to this particular company? Here's something else really cool. You see how this transaction has a black line all the way around it? That means that that's the transaction I'm currently selected on. And so whenever you're in a register, you're selected on a transaction. For example, this one's for Gas Electric Company. I have a button up here that says Quick Report. And when I click that button, what it's going to do is it's going to show me, hey, in this register, here is every check that we wrote to the gas and electric company. And had this been a real company file and we had reconciled, it would tell you which ones have cleared the bank. Maybe not that big of a moment to you, but those of you that do accounting, right? This is when you get in the weeds. So you have a supplier that says, hey, you're a month behind with me. I don't think so, right? I've sent you a check every month. Go search that vendor, pull this up, and be like, oh, wait a minute. Back in February, I cut a check. That check still hasn't cleared the bank. Something probably happened with that payment, right? So it's going to be when you have to kind of investigate things a little bit, you'll be able to dig in here and see, okay, here's what happened. Or you can call back and say, hey, I'm showing that every month it's cleared. Will you check for check number 5193? That's the one I think you're missing. And then you can kind of go do that back and forth thing with your vendor. So that's what that looks like. So that's my register here.
How do you handle stuff when we're using our business Spark card? How, like a lot of stuff is being paid for with that card, then the card's paid off at the end of the month. How's that registered in there?
Great question. So I'm going to touch on that because we're going to kind of go through some theory. There's a couple of ways we can do that. I'll show you my preferred way of handling that, but great question. So I will get to that. Okay, so that's the first way that I can get transactions into that check register. Just go directly in there and entering those transactions. I showed that to you, but most users of QuickBooks don't ever do that. Okay? So the second way that I can get checks into my check register is by using one of the modules inside of QuickBooks. So what do I mean by that? Is I have a module right here where I can do write checks. And if I use this module, it'll automatically put that transaction in the register. And this is a little bit easier to do than what we just went through. So we'll pull that open and we'll look at it here quick. The other way is that if I enter bills and then I pay bills, I'm going to show you that here in a second. When you pay that bill, it's going to automatically put that transaction into your register. Okay? So that's kind of that second step, is we would use modules. And this is quite honestly is where a lot of us are going to live, is by using the tools inside of QuickBooks to get the stuff into the register. So here's what that looks like. Is if I use this write checks module, I'll get a screen like this that pops up, and it kind of looks like a check, right? So I just got to fill it out. Those of you that have multiple checking accounts inside of your business organization, the first thing that you're going to do when we come to this module, to this write checks module, is you're going to look at your bank account to make sure that you're working out of the right account. And I don't know how to help you that are just new to this, right? You're going to make that mistake, and the pain of making that mistake will cause you to never do it again. So sometimes it's kind of like the hot stove thing, right? Sometimes you just got to do it, right? So I'm going to make sure I got the right account. I'm going to fill this out here. By the way, probably one of the most important things I can teach you today about working in QuickBooks and becoming really, really effective inside of QuickBooks is how you navigate around in QuickBooks. So I have this weird saying, and I made it up just so that way it would stick in your head. The tab key is your friend. Okay? So a lot of times what happens is we are used to grabbing our mouse and putting our cursor where we want it to go on the screen. And that's fine in some cases, but I would suspect that once you become really proficient using QuickBooks, you'll probably use your mouse maybe 10% of the time. The rest of the time, you're just kind of using that tab key to navigate from one screen to the other. Now, there's a problem kind of inherent with QuickBooks, is some of us may be used to a different type of computer system, maybe something that was built on DOS. And to move between fields in that software, a lot of times you would hit the enter key. Has anybody ever used a software like that to where, okay, I want to hit the enter key once I'm done typing something in? You don't want to do that with QuickBooks. You'll get frustrated and you will beat up your laptop or whatever you're working on, right? So it'll frustrate you. Because what the enter key does is whatever is blue on your screen. So if I was to hit the enter key, it would just save this transaction and leave. You're like, oh, it wasn't done yet. So we got to go back and we got to find that transaction. So the tab key is your friend. If you hit the tab key one too many times, shift tab will move your cursor back to the previous field. Okay? So I'm just going to pretend we're going to do that kind of similar transaction here. I'm going to Walmart. Let's spend $500 at Walmart. Put my memo here, office paper, so on and so forth. Sometimes, however, we will have transactions that are just a bit more complex than that, where we may need to split that transaction out. So we went to Walmart, and don't ask me why, but we bought some office paper, and we also bought some oil for the forklift. So those are kind of two different buckets that hits. We call that a split transaction. And so what I can do is I can split that transaction up here. I'm just going to put it under gas, okay? So what's going to happen here in my chart of accounts, if I was to go and be dramatic about this, I have my cash bucket over here. One thing that we fundamentally have to understand about accounting is that we have these things called debits and credits. Saw a couple of your eyes roll because you remember this from the bookkeeping class you took, right? The nice thing about the software is that you don't have to worry about debits and credits, okay? For the most part, you don't have to worry about your debits and credits. Software is going to handle that for you. However, what I do want you to understand is that there is a thing called debits and credits. What that means is that there's always going to be two or more sides to every transaction. And those two sides are going to be equal. Let me explain that. So my company checking account, my checking account that we were working in, that's a bucket over here. I spent $500. So what this software is doing behind the scenes, it goes into that bucket, it grabs $500, and what I have to do is I have to deposit $500 into another bucket, do I not? Or a combination of buckets, in order for my transaction to be in balance. So what I did here is I went over to my supply bucket and I dropped $200 into that bucket. I took my remaining $300 and I put it in my car and truck expense because I bought some oil, right? And so those were my two buckets that I had to deal with. And when I add up the buckets over here, it's going to equal the buckets over there. And that's just logical, right? So you can't pay a $250 light bill by only taking $100 out of your checking account, right? Universe breaks when we try doing that. So our debits and credits will always equal. And QuickBooks is going to work with us to make sure that that happens. So those of you that ever were privileged enough to use the old ledger books, right? You know what I'm talking about. Ultimately, it has to equal at the end. This takes care of all of that hard work, right? So this is how I'm going to do that. You can see up here I have some different things that I can do. I can set this up to print later. Or if I take that check mark off, I can put the transaction ID in here. So let's just say it's EFT. And one thing I'm a huge fan of inside of QuickBooks is right here where this says attach file. So I am a huge fan of always attaching our documents inside of QuickBooks. And so and this becomes easier because a lot of times what happens is a lot of our vendors now are emailing us their invoices. So we get that. Or maybe we have some paper copies and we need to run through a scanner. Or there's even apps on your phone that you can just take a picture of it and it will kind of really kind of clean it up and make a nice scanned image of that. But I recommend that any transaction we do inside QuickBooks, we're going to go ahead and we're going to attach that file right in here. So how I do that is I just click this button here, attach file. And then I can either click this computer, it's just like attaching an attachment to an email, right? So I could click this computer button here. Let's pretend that this was the invoice or whatever, and I could just attach it right there.
Question,
Yes.
like from Adobe, or how do you get them into QuickBooks if they're on a Word document or in your Microsoft Word?
Yeah, so the nice thing is it doesn't matter the file format. You can attach a picture here, you can attach a Word document, an Excel document, whatever different
So
files.
just go to your files and.
Grab
pick
it.
something And dump it.
And dump it right in there. And so the nice thing about that is that QuickBooks is really, really smart. Is that what it's doing is that, like I used to attach this off my desktop. Now if I go and I delete that file off my desktop, QuickBooks has a copy of it sitting inside my QuickBooks file structure. So even if I delete it, it's still going to be there, right? So for me to go back and reference later.
So technically, each invoice you get, whether it's electronic or hard copy.
I put it in there. So we had some ag wives in the room, is that correct? So I'm stereotyping here, right? But I'm gonna help you win a whole lot more arguments with your spouse, right? And here's the reason, right? Is that, let's say we got a grain truck, I'm just making this up, right? But it might touch home just a little bit. Let's say we got a grain truck, right? And we put a new starter on the grain truck, and spouse comes in and says, I need you to find that invoice that's under warranty, right? We just put that starter in last year, it's under warranty. And you're like, we did not put that starter in last year. That was like a decade ago, right? But typically, the spouse will be kind of stubborn about it. Like, I know it was last year, you gotta go find that invoice. I know that we put it in there, right? And you're like, it was 10 years ago. I know it's 10 years ago. The nice thing that we can do here is if we have been attaching our documents, within probably 30 seconds, you will have a copy of that. Fast forward a decade from now, and you're like, nope, see, you bought that 10 years ago, right? So like, oh, right? So, or how many times do you get, hey, how much should we pay to have that fixed? Or how much should we pay for seed 3 years ago? Or whatever. Just having all that information right here at your fingertips will make things so much smoother for you. Right? I highly, highly recommend. Now it sounds like I'm just kind of.
Here's another shortcut on Adobe if you have like 10 invoices you're gonna pay on the same day. We always date them 2020 -08 -11, and then you rename them after that. But it'll at least get those first few entries out of the way, the common entries.
Yeah, and so, yeah, whatever system works for you. However, one thing that I do recommend, absolutely recommend, is that you would work with dual monitors. Okay? How many of us have dual monitors that we work with? Good, a lot of us do. Right? So Mary, can I pick on you here real quick? You're on vacation this week? A little bit? So, oh, I'm sorry, Lisa. Lisa, do you have dual monitors? So I'm gonna pick on you. Okay, so Lisa, I'm gonna go to your office tomorrow, and I'm gonna take one of your monitors away. Are we still friends? No? Like you seem really nice, but would you maybe cut me? Right? So those of you that don't have dual monitors, we can turn one of the nicest people in the room into somebody that would cut me if I took their monitor away. That is how important it is for you to have dual monitors. And with any computer that you all are running right now, it's as simple as probably just buying another monitor and plugging it in, right? So we could solve this problem for about 150 bucks. And so the reason that that's so incredibly important is that it is going to increase your productivity almost more than twofold is what they tell us. Especially with QuickBooks, if we have multiple monitors, it's going to dramatically increase your productivity. So if you don't have it, that's your first step after you leave this class is to go get a second monitor. I forget, I was talking to somebody last week that I've been telling this for years, and they said, man, I don't even know how I lived that long without having dual monitors. It was like they awoke from the fall. Again, it was amazing. But the other nice thing, if you have dual monitors, let's pretend I have another monitor here, and I want to attach a document. So what I do is I just take all my documents and I scan them into a folder. On this page over here, when I look in that folder, I can click on it and see a little preview. I'm typically entering it off of that preview and then just dragging it over and dropping it right there. By the way, emails, you can also drag an email and drop it right there. And so you always have that correspondence, even if you delete your email account, whatever. Very, very important. Okay, so I will, yes?
You can go paperless with this, and in the event of an audit, you know, then these documents, I mean, if you're being audited, then it's all good. You don't have to keep paper documents. You don't have to have that file cabinet of documents.
Right. So,
Most people aren't going to pay
I'm recording myself, so I gotta be careful. So, if anybody ever, does anybody here work for the IRS?
I work on the other side.
Okay, so if you're ever going, so you've seen this before, right? So the IRS, if you get one of those love letters, what we call them, one of the things that they typically will ask for is a copy of your QuickBooks file, okay? And all I've got to say is you're never going to give them a copy of your QuickBooks file, okay? And there's a couple of reasons for that. One is that if I'm being audited for last year, they now have all of my information, right? And the other thing with that, Ron, is that when they do audits, like a lot of people think when I go through an audit, that I've got to prove every receipt that I've ever had. No, they do something called sampling. Hey, I want to see these 20 receipts. But here's the deal, is that if you are attaching here and you give them a copy of your QuickBooks file, are they going to ask for the ones that you have? Or are they going to ask for the ones you don't have? So I never give them just a straight copy of the QuickBooks file. If you reach out to a pro advisor, if anybody's ever in this situation, if you reach out to a pro advisor, what we do is we chop your QuickBooks file up, and for the year, put beginning balances in there, every transaction for the year, ending balance, and that's what we give to the IRS if they want a copy of the QuickBooks file. Not that we're trying to hide, cheat, anything like that. It's just we're giving them exactly what they asked for, right? Instead of more than they asked for. Okay. So we talked about attaching. Very, very important. I'm going to hit save and close on this.
And attachments, I'm assuming you use that on accounts receivable in addition to checks, other accounts.
Everywhere we enter a transaction in QuickBooks, we can use that.
And you can have multiple attachments?
Multiple attachments. If anybody wants a bonus funny story after we're done here, I have a good one on attachments, but we don't have time now. Okay, so the most important thing that you are going to do as a bookkeeper or as an accountant is reconciling the account out at the end of the day. Okay? So I'm going to give you kind of Jacob's guidelines for reconciliation. You can take them, leave them, whatever you want to do. But the first rule of reconciling your bank account out is if you have a business account, I want that statement mailed to you. Okay? So you need to have your bank statement mailed to you. If your bank wants to charge you $4 or $5 to mail that to you, fine, pay it. It's the best money you will spend. Okay? I want a paper copy of that statement for multiple different reasons. One is that when we do our financial review at the end of the month as business owners, we're going to look at that actual statement. A lot of you are like, well, I can just print it out. It's the exact same thing. For whatever reason, it's not. Okay? So yes, it's got the exact same stuff on it, but we don't treat it with the same reverence as the one that was mailed to us. Okay? Almost every time that we have been called into do forensic accounting, so if there was embezzlement in a company, almost every single time that we have been called in to do that, had the business owner looked at the bank statement, within 30 days, that embezzlement would have been caught. Right? I can only think of one exception to that rule. So if you want the best insurance policy of avoiding embezzlement, look at have the bank statement mailed to you, open it up and look at it. So we make that If you're a client of ours, and especially if you're a nonprofit that we help with, that's just part of the deal. Like, we won't give you financials until you look at your bank statement. Okay, very, very important. And Adam, this is very, very important for you as well. And the reason for that is in your world, there are so many productivity tools, right? Time tracking, all this different stuff, all these different apps that we could have inside of our business. And I'm just stereotyping here, but a lot of times, hey, let's try this. Let's see if this will work to kind of help us keep track of expenses, whatever, right? And so we sign up for these things and then we forget about them, and they're only $12 a month. But then we don't even think about it. If we have somebody helping us with the books, they're thinking that you're using that. And yet, when you look at the bank statement, you're like, I didn't use that in a year. I need to go on and cancel it. Does that make sense? That happens all the time in business. So look at your bank statements. So the second thing is that we need to reconcile this account out within days of receiving that bank statement. So if you're not completely have all of your accounts correct out by the 10th of the month, we probably need to adjust our priorities a little bit. Because it's only when we reconcile out all of our accounts that I can have a good feeling about going and looking at the financials. Does that make sense? Okay. So what I'm going to do when I go to reconcile an account out, we're going to go through this pretty quick. But what you do is essentially put the statement end date. You'd have a beginning balance here. So this is a brand new company file, but you'd have a beginning balance. You hold your breath, you look at the bank statement, make sure that the beginning balances match. What's it called when they don't match? Does anyone know? It's a bad day, okay? So if it doesn't match, you can pull a report here. You can pull a report to see who changed what, when, and maybe try to go fix it, right? Ending balance in there. If you had service charges, interest earned, so on and so forth, then you hit continue. Making that up. So then you get to this screen. By the way, public service announcement, if you ever walk up behind somebody and you see this screen on their computer, you just walk away. You don't say a word. You just walk away, right? Because they're in the middle of this, and we're not going to ask them if they know where the extra code paper is or whatever. So what you're going to do, you're going to look at that bank statement, and you're going to start checking off transactions on that bank statement. You're going to see the transaction on the bank statement, and you're going to come over here and you're going to put a check mark once you find that transaction. Right? So you're just working through this. You can, so on this side I've got all my checks, on this side I got my deposits. You can sort these by check number. You can sort them by amount. If you need help finding transactions, you can sort it by amount. And you just put check marks next to all the transactions that showed up on that bank statement. I'm oversimplifying this. Transaction on the bank statement, put a check mark next to here. And what I usually do on that bank statement is I'll put a real little check mark next to that transaction, or a little dot, something like that. Those of you that go through your first reconciliation, what you'll do is you'll grab that bank statement, you'll find the transaction on the bank statement, you'll put a check mark here, and you'll cross off that transaction on the bank statement. Keep doing that all the way through there. Has anybody heard of Murphy's Law? That is a surefire way that you're going to be redoing this reconciliation, right? So, some of you have done this before, right? So, I'm speaking to you a little bit. So your goal, and we're going to pretend here, is that once you've gone through all of your transactions, your goal is to get this amount to 0. The difference here needs to be 0. That means that everything that happened at the bank also happened inside of QuickBooks. Sometimes when you're going through this, you're going to say, oh, I forgot to enter my utility bill that automatically came out. You just hit leave, go to that right checks, put it in there, come back here, and it will be there for you to put a check mark next to. Okay? And once you've checked everything off and you get this number to 0, you're reconciled. However, it doesn't always work quite that easily if you've gone through this process before. So my example is exaggerated here. I'm off by 331,000. You're never going to be off by 331,000. It always seems like you're off like 18 cents. Has anybody gone through this before? Like, it's always off by like 18 cents. So here's how you go and you find where to start looking for that discrepancy. First thing you're going to do is take the amount that you're off. Let's say you're off 27 cents. I want you to divide that by 9. Okay? If you come up with a whole number, so 27 divided by 9 would be 3, not 3.2. You get 3, that's a whole number. Chances are, if that's the case, you have transposed a number. So something was entered as 23 instead of 32, if it's divisible by 9. And here's the crazy thing. Our brain will look at that and read it wrong all day long until you tell your brain, hey, I'm looking for a transposed number, and then it'll pop up like this. The second thing that you're going to do is you're going to look at your deposits, checks, and payments, and you're going to see which side of this equation you're off on, because your bank statement is going to have check figures. So you're going to see what side you're off on so you can start hunting it down. Okay? Then the next rule, if you still cannot find it, is you are only allowed to work on this for 5 minutes. Then you have to go take a smoke break or whatever you do. You have to take a break and then come back and look at it. So many times people will just bury their heads in there for 45 minutes, an hour, trying to find that mistake. They get up, go to the bathroom, and they come back and back, oh, there it is, right? So we kind of have to reprogram our mind a little bit, okay? So let's pretend we do get this to 0. I'm going to do this a little bit differently here.
So since we're not dealing with debits and credits, you don't have to worry about making that mistake. Divide by 2 and find it, entered in a, this program doesn't.
Yeah, that's very,
facilitate that.
very rare that we would have, we entered it on the wrong side.
And it obviously won't let you post an out of balance entry.
Yeah. So, which is nice, because this is saving us from a lot of what legacy systems problems that we would have with those. That would be the case. So here's the deal. Once you get this difference to 0, we're going to pretend that. Most people are excited and they hit reconcile now. Move on to the next one. However, this is just where your work is beginning. Because there are so many times that we'll go and we'll look at an organization's QuickBooks file and it'll say, hey, you have $320,000 in the bank. I just always start off with the question of, hey, do you really have $320,000 in the bank? Because again, I want that to be the most accurate reflection of how much cash I have on hand. Like, no, we got like $5,000 in the bank. So what does that tell me? It's like my books somewhere over time are off by $315,000, right? So here's where the work really starts and really begins. So I would say, I'm going to redefine your job duties to say that your number one job duty is to be able to explain anything that's on this screen that does not have a check mark next to it. Right? So the executive team comes in. Rachel, I'm just pretending here. Executive team comes in and says, hey, I got 4 transactions that don't have a check mark next to it. Why is that? That would be kind of our job, would be to be able to answer that. And a lot of times it's going to be super easy. Well, yeah, I mailed those out the last week of the month. They just haven't cleared yet. Okay, that makes sense. Well, what if they're still hanging out there a month from now? Whoa, did we not mail them? Did they not cash them? What happened here? We're going to start asking those questions. I'm also going to sort this by amount, right? I'm kind of making this up, but I have two $25 transactions to the same place on the same day. One of them cleared, one of them didn't. Maybe I entered that in twice. So you just double click that transaction and avoid it out. Because otherwise, if I didn't do that, my bank account balance is going to be off by $25 because that transaction never really happened in the real world. Occasionally, you'll have some employees who never catch their paychecks. Has anybody experienced that before? Right? So you just have a staff, somebody never catches their paycheck. You're like, how do they live? In their parents' basement. That's how they live. Right? So they're not cashing the paycheck. So you have to always kind of be on, hey, cash your paycheck, cash your paycheck. So the whole idea of this, and your takeaway that I want you to have, the biggest takeaway I want you to have for the day is that your job is to explain away any transactions that are still unchecked here. We'll look at company files all the time where there's transactions from 2014, 2016 that are still not checked. And so all that time I'm thinking in the back of my head, man, they never had an accurate balance of what there was in their checking account. Their tax returns are wrong, right? And so we want to make sure that we're going through this every month and getting that stuff sorted out. Now QuickBooks will allow us to do something here. Because my number is not at 0, I can theoretically reconcile this. You just enter an adjustment to take care of it and make it 0. It's what we call a reconciliation discrepancy. Here's what I want you to know. I don't care if that reconciliation discrepancy is 10 cents or if it's $89,000. That tells me one thing. There's an error someplace, right? And so, like, there's this, a bank in a small town by us, they got called in one time because their credit people were having trouble with a loan, and it wasn't anything fundamentally wrong, right? It was checking all the boxes, but the credit guy just had this gut feeling, like, hey, I don't know, like, if what I'm looking at is right. Can you come in and kind of look at it? I said, what made you believe that? He says, well, there's a 36-cent reconciliation discrepancy. So I know that they're making up their reconciliations. What else are they making up? 36 cents caused that question and held their loan up, right?
Sounds like a loan officer. Sure.
Right? But that was, it was a legitimate concern, right? I mean, like in my opinion, it was a legitimate concern. Like, hey, what's going on here? Are we just making everything up? Or were we just making this up? And so let's just not ever have that question and keep that reconciliation discrepancy off there. So we'll never do that. We will find out where it's at, right? So because a lot of times we'll do the math and we'll be like, man, they're paying me a lot of money to find 17 cents. That's important. It's important enough to spend the money to find it, in my opinion.
That's because you're accountant, right?
Well, that's because it's probably not 17 cents. There's an error in there, which then, that might be the tip of the iceberg.
Mm-hmm.
So
And we just never know. I'm a weird accountant, though. Like, most accountants are black and white. I believe that there's this whole world of gray. And there's a reason I design accounting systems instead of do tax returns. The ADHD is just a little too high for me to buckle myself to a chair. So, yeah, no. I'm probably the only non-A-type accountant. But I had to hire a whole bunch of A-types, right? So, okay. So we've got that. I'm glad we got through that, because that's the most important thing that we're going to do. Credit cards. I'm going to touch on that here real quick. So there's a couple of ways that we can do credit cards. So we have, let's say, a Chase card that we're swiping transactions on. What I recommend we do is we go into our chart of accounts and we create an account for that credit card. Okay? Just like we created, that we're going to create its own bucket. And when you do that, right here, you will enter each individual charge one by one. Every charge that we've had on that card, we would enter it in here. And then once we get that statement, we'll go through the same process of reconciling that credit card statement. And then the nice thing about it is when you reconcile that credit card statement, it's going to ask you what we're going to do with that balance. Are you going to go online and pay that off? Are we going to pay part of it off? What are we going to do with that? It'll guide you to do that and take care of all the transactions behind the scene. Now, we don't have a lot of time here, but one thing that I just want to share with you is that you guys have all seen this. We're coming back here to do a class, and in that class, there's a third way to get transactions into your bank account, which unfortunately we don't have time for today. But that's where I can connect my QuickBooks to my credit card company. I can connect it to my bank account. And so that way, when we start designing rules inside of QuickBooks, we can automate much of the actual bookkeeping work that's going to happen inside of your business. So if we get that set up effectively, we can do that. So like you might have been thinking, I got to enter every single time I swipe my credit card. But what if we made a rule inside of QuickBooks and we connected it to our bank that said, hey, every time you see a charge for Casey's, we have Casey's gas stations here, I believe. Every time we see a charge for Casey's, that's where we usually get fuel, that's gonna be an automobile expense. And we can teach QuickBooks that to make that transaction kind of automatically happen for us. Every time we go to Office Depot, that's office supplies. Every time we see the utility company come through, this is how we're gonna book it. And so by taking it to that next level and putting some automation in it, we can really, really become effective on what we're doing here. So I started this, because we only have 5 minutes left, right? Okay, so I started this and I gave a little teaser. And so I said, what is the goal of our company? Who wants to take a shot at that? What's the goal of our company?
To be profitable.